Very good afternoon, everyone, and welcome to this session on HDFC Technology Fund. We've launched this. We are launching this fund on 25th August. The NFO will be on till 5th September. So, uh, at this point in time, I'm sure a lot of our viewers will have questions as to how is the market positioned in terms of the overall equity markets, why technology, and why now. A lot of questions, I'm sure, will be there in the minds of people. Hope we will try to answer all those questions in this session. Uh, by the way, if I have to just give a background into the overall concept, uh, I mean, first of all, this is a sectoral fund, but let me tell you that it's not like a typical sectoral story wherein it is narrowly defined. I mean, with technology, we mean not just IT companies, but anything that is to do with technology. So many other allied sectors also will form part of our universe. As you all aware, technology, I mean, the word technology itself gives us an idea that it has brought about huge amount of changes to our lives. Be it, I mean, if you see how life has changed in the last 20, 30 years in terms of how we shop, how we bank, pay, travel, learn, invest, how we meet, how we communicate, read, get entertained. So many aspects of our life has undergone tremendous amount of change in the last many years. But if you see, there is a lot of background work that goes into creating and managing these technologies. For instance, there are a lot of businesses that are involved in managing and creating these technologies, and that's where HDFC Technology Fund comes into the picture, because it is also, we believe, is a huge investment opportunity from a listed equity space, and that's how that's why we have launched this fund. And also, let's not forget about the fact that India, where we are positioned today, we have a huge strength in terms of the people, in terms of the people that we have, as to which is our huge strength. I mean, the large amount of skilled, educated workforce that is there. And for the whole world, I mean, India is kind of the nucleus where, I mean, for any global business, I think they have to be involved with India when it comes to information technology and other allied services. So that's where this concept becomes even more compelling with respect to being the investment opportunity. So that is a brief background. So, but to discuss this in detail, we have Mr. Balakumar, who will be the fund manager of this fund. So, if I have to give a brief intro about him, Bala has about nearly over 12 years of experience, and he's been our technology analyst for over nearly 3 years now. So he is a BTech from Coimbatore Institute of Technology. He is a pass out of IIM Calcutta and also a CFA, a charter holder. So without taking more time on this, I mean, I'll pass on the floor to Bala. So over to you, Bala. So please take us through the entire concept in detailed manner, and you can switch on your presentation so that it becomes easy for us to understand. And as Bala loads his presentation, just a small bit of announcement. Please do post in your questions in the chat window or the Q&A window. We'll take them up towards the end of the session. Thank you very much.
Hi Ram, thanks for the intro. Very good intro. Could you see the presentation? Could you please confirm?
Yes, I can see the presentation.
Sure. First, thanks everyone for taking your time out and joining the webinar. Over the presentation, I'll touch upon three themes mainly. The first theme would be technology is becoming an indispensable part of our lives and will continue to remain so. And the theme second would be Indian IT services has been a consistent market share gainers over the past 2 decades. And with the best talent availability, India will continue to remain the source for the global tech world. There is no close competition to India, especially in terms of talent. Theme three would be digitalization in India. It has picked up over the recent years, but it's still a long way to go. There's a long runway for growth. These are the three main themes which I will delve upon in the presentation. Moving on to the first theme, increasing tech intensity. I think Ram mentioned in his initial remarks how technology is has impacted each and every facet of our lives. The next two slides are more a refresher of uh, how every activity which we are doing today has been impacted by technology compared to how the same activity was performed, let's say, a decade or two ago. For example, if you look at banking, earlier, if you want to open a bank account or if you want to initiate a loan request, you have to visit a bank branch. Today, you could do it with through the either the bank website or the bank mobile app. In retail, let's say if I want to buy a garment or a shoe or even grocery, earlier I have to go to the physical store. Now everything could be done directly through the app, and the payment is also made digitally. So there is no need for a cash or check or DD type of instrument. In manufacturing, if someone has visited a manufacturing shop floor 2 decades ago and probably is visiting today, then they could actually appreciate the intensity of automation, which has clearly gone up over the past 2 decades. A more relevant example for people, for the audience here, would be the capital markets. Let's say 2 decades or 3 decades ago, it was a piece of paper which gave a claim to a part of equity or a debt ownership in a company, whereas today everything is dematerialized. Um, I think the generation which is currently in schools and colleges, for them, the impact of technology is much more when compared to the generation who are working or who are retired. Because for them, I think even imparting education, their technology has made deep inroads. Also, thanks to the pandemic. Uh, Again, if you look at uh, the point we are trying to make is it's not just the private corporations, private entities which are leading in technology adoption. Governments across the world have been focused on digital adoption. If, for example, India is leading the world in terms of digital stacks such as UPI and Aadhaar, direct benefit transfer is a consequence of having such a world-class stock stack like an Aadhaar. In healthcare, uh, technology is trying to bridge the gap between the demand supply imbalance and also the location mismatch between the healthcare specialists and also the patients. Forget about how we do things. Uh, Even if we consider an activity like if someone wants to grab our attention, which is advertising, a decade or two ago, they have to either it has to be through large billboards or they have to buy prime ad space in prime TV shows, radios, newspapers, etc. Now the ads are also delivered digitally. They have to buy digital inventory, which is nothing but a space in either the mobile apps or the web pages which we are browsing. And the final example is meetings, which is something which is being demonstrated live now uh, to reach a large portion of the people instead of reaching out physically. Nowadays it is very easy to reach out to groups of people through digital channels, the group web calls. So the point is, if technology adoption has been there for the past 2 decades, is it reflecting somewhere? I think in the next two slides, we will try to give some evidence of why this is the evidence to substantiate the fact that the technology penetration has already been increasing. The left chart shows tech spending as a percentage of GDP for few countries. We have considered USA and India here. On the right side chart depicts the technology spends as percentage of revenues for US banks. Banks are large spenders of technology. Uh, the the constant theme here, if you ignore the noise of numbers, is that it's a rising trend. It's a secular increase, the technology penetration. At the next slide, this slide puts the examples which we discussed earlier into numbers. For example, if you look at the top left chart, you could clearly see the digital mode of transaction, which is primarily the UPI, in Indian retail transaction volume is currently at around 60%. It was negligible in FY14. If you look at the top right chart, e-commerce penetration is currently at 7% for India, versus 4% few years ago. And the most important thing is this is a theme across markets globally. Similarly, if you look at the right bottom chart, that's the digital ad spend as percentage of total ad spends. Uh, it's been rising across countries, and India it's currently stands at around 30%. So the next point, tech penetration has been increasing. Yes, we have evidence for that. But why should we think that it should continue to remain strong, the technology penetration? Uh, I would say that technology is becoming very critical for the survival of any enterprise over the long term today. Uh, the key reasons being, if you look at any sector, most of the sectors, the new entrance or the new competition is digital led, technology driven. We have tried to give two examples from one from banking industry and one from retail industry. If you look at the banks, uh, the digital challenger banks, these are banks which don't have physical branches at all. Everything is delivered through digital modes. Every activity or interaction is done either through their web or mobile app. The number of such banks, such digital challenger banks, and also the assets managed by them, they have been increasing over the past few years. Similarly, if you look at the retail industry, for any retail company, any brand, the big moat is distribution. How do I ensure that my brand is available at each and every corner of the country? How do I ensure that I get the best sales space for the products, for my products? But with increasing e-commerce penetration, currently we have a new breed of competition. These are mainly direct to consumer brands. They primarily sell their products through online channel, which could be either through their marketplaces or through their own websites. And they also have, increasingly they are also setting up their own direct stores, direct channel stores. But predominantly, if you look at the top right chart, 85% of the revenues is coming from the online mode. If you look at both the segments, both digital challenger banks as well as direct to consumer banks, they are currently very small when compared to the overall market size. But they have been growing at a faster pace when compared to their respective underlying industry. So, how does this impact technology spends? I think the implication is, if the new competition is focused on delivering using technology as the key differentiator and are growing at a pace faster than the industry, then it will incumbents, be it large banks or large retail brands, to step up their technology investments in order to sustain their market share and or even grow their market share. So essentially, this is something which will drive the technology spends going forward in the medium to long term. This chart is again more of an evidence. Because of the increasing tech penetration, if you look at, we have used US as an example. If you look at the left chart, that's the US tech market cap. This excludes internet. The US tech market cap as percentage total market cap has almost doubled in the past 2 decades. If you look at the right side chart, in the S&P 500, currently the top 10 companies by market weightage, 7 of the top 10 companies are either in tech or internet. So this is again a consequence of the increasing tech penetration, that the companies which perform those activities have gained scale in the economy. Uh, okay, tech penetration have been improving. So what does it mean for Indian IT? Have they benefited and how do they fare? Um, I think Indian IT's key forte or the stronghold is services segment, which could be IT, engineering services, or BPO. If you look at the growth here, you could clearly see that.
Uh, Bala, I mean, we lost you about half a minute back. So I think your screen was kind of stuck.
Okay,
So
can you see
if you
me
can
now?
go back, yeah, now everything is clear. Maybe you can go back maybe half minute of content and start from there.
Sure. Apologies for the interruption. Probably what I'm trying to say is that Indian IT's forte is stronghold is services, and services is a fast-growing segment within the overall tech industry. Tech, if you consider 100 rupees as the wallet, 100 rupees is the amount spent in tech, then the mix, which currently goes to the IT services, that has expanded over the past several years. And if you look at the top left chart here, the uh, you could clearly see that Indian IT services exports has consistently outgrown the global IT services spending, which is a fast growing segment within the tech landscape. So as a consequence of the faster growth. The right side chart gives the market share. Currently, we are at around 15% market share in terms of total global IT services. So the question here is, at 15%, have we peaked out? Is there room for growth? The answer to that, if you look at the bottom left side chart, you could clearly see the largest services firm, which is based in the US, is about roughly 5% of the global market, which means the market is very fragmented. And the largest Indian IT player, despite the strong growth we had seen over the past 2 decades, is still about 2% of the market. So if the companies continue to execute well, I think the room for growth remains there. The scale is not a constraint in my view. This is another important chart because we all know that the Indian IT industry gained prominence mainly because of caste arbitrage. The industry started, or I would say, gained prominence because of the caste arbitrage during the late 90s and then the early 2000s. But if you look at the last 2 decades, you could clearly see there were multiple technology changes. First, it was offshoring wave, and then application or ERP implementation, and in the 2000s and early 2010s, it was the infrastructure wave. The past decade has been about last 10 years has been about cloud or automation, etc. But I think the top left chart shows clearly that we have consistently outperformed across technology cycles. To me, this means that the industry has adapted very well to all the technology changes, and they have been able to sustain their market share gains. So probably we would have started gaining share or started gaining prominence because of the cost arbitrage. But the simple fact that we still grow ahead of the market is mainly because of capabilities and nothing else. Again, this slide is to substantiate how the industry has adapted well. If you look at the top right chart, you could clearly see that digital as percentage of revenues. Digital includes new technologies such as cloud or automation, AI, IoT, etc. The mix has increased from roughly 15% to about 1/3 of the revenues currently. If you look at the bottom left chart, you could clearly see that this portion of revenues has grown at 3x the pace of the total revenues. So it's an evidence to the thesis that Indian IT has adapted well to the new technology changes. So we discussed so far that IT services or services has been a stronghold for Indian IT industry, but there are green shoots that we are making progress in spaces outside services as well. This is still nascent, but if you look at the SaaS portion, which is nothing but software as a service segment, this is a subset of software. So here in 2020, if you look at the top right chart, India had about 4% market share, and this is expected to double to roughly 8% by 2027. And if you look at the scale of the companies, if you look at the bottom chart here, in 2017, we had just one company which the $100 million plus in revenues, whereas in 2022, we had 13 companies which had $100 million plus in revenues. In fact, the largest company clocks more than $1 billion in revenues. So clearly, the companies have been gaining scale and we are gaining market share. This is still a nation space, but this is again a spillover effect of the technological prowess which we accumulated over the past 2 decades, I would say. The industry is very diverse. Like I said, it's predominantly services. If you look at the top left chart, IT services, BPO and ER&D would be around 85%. Software and hardware would be 15%. From an investor point of view, if you look at the top right chart, the industry generates around 90% of the revenues from the global markets, Americas and Europe. ROW includes Asia, but the major markets are Americas and Europe. So if you look at historically over the past 2 decades, USD has appreciated against INR by around 3%. So this has been a tailwind to the sector top line. So from an investor point of view, this is one industry which gives global exposure. Okay, the next point, tech penetration has been increasing. Indian IT services has done well, but why should it continue to do well? I think the key answer here is, like Ram also mentioned in his opening remarks, it's the talent. If you look at services, especially, or even the tech industry, the raw material is people. And if you look at that talent availability, in India scores well ahead in terms of the annual STEM graduates. If you look at the left side chart, which gives the country-wise tech talent distribution, probably India is second only to the US. This doesn't include Indians working in the US. So in terms of the stock, India is second only to the US. But the most important chart is the right side chart, which gives the flow, the number of STEM graduates, which are essentially the people who are employable in this industry. Uh, I think the India annually produces roughly 3x the total number of STEM graduates compared to the closest competition, which is the US. So if you look at incremental growth or incremental spend in revenues, then India is a country which cannot be ignored, and India will continue to remain the powerhouse of talent for the world. The left side chart is again an evidence to the fact that tech talent is scarce in developed markets. The chart is for the US unemployment rate. If you look at the bottom line depicts the unemployment rate is that in the tech industry in the US, it's been consistently below the overall tech unemployment rate, clearly depicting that tech talent is more wanted, tech talent is scarce there. So how do the developed world address the talent scarcity? One, they attract talent. Uh, the right side chart is an example for that. If you look at the number of H1B visas, the skilled immigrant visas given in 2022, you could see that around 3/4 of the visas were granted to Indians. So Indians were the major beneficiaries. They were attracted to work in developed markets. And the other way, the second way how they address the talent scarcity is they move their global in-house centers, which is the technology captives, to India. If you look at the charts here, the top left depicts the number of such captives, and if you look at the right side, it's the revenues which are generated by such captives, and the bottom chart depicts the number of employees who are working in such captives. Everything has seen a linear trend. So the global corporations are expanding their footprint in India, mainly in terms of the technology units, to uh, to leverage the talent base which is available in India. And what has this sector done for the country? So, like we have seen, it's a predominantly export sector. And if I look at the Indian IT revenues, because of the strong growth which we had over the past 2 decades, the contribution to GDP has expanded from roughly 2% to close to 7.5% now. 2% was about 2 decades ago. And if you look at a more relevant metrics, which is the services exports from India, Indian IT contributes more than half of the services exports from India. So IT has been a success story for the country. Uh, just to reiterate on what could be the medium-term tailwinds to the Indian IT sector. One, we discussed this. I'm just putting some perspective on the numbers. So one is the tech spending should accelerate. If this is from industry analysts, if you look at the expectation, the 2022-2027 CAGR is expected to be around roughly 10%. And more importantly, this is 2x the growth which we saw in 2016 to 19. So there is an expectation of acceleration in spends post the pandemic. And if you look at the right side chart, the emerging technologies such as cloud, IoT, or AI are expected to grow even faster. And the other factor which could support the revenues for Indian IT is the increase in comfort with remote working or offshoring. If you look at the left side chart, uh, before FY20, if you consider 100 as the number of people who are working in an Indian IT company, 70 to 72 people would be working in India, whereas 28 to 30 people would be working out of customer locations. And the number of people who are working in India, that increased from 70 to 72 to 76%, or to 76. So this signals that there is an increased comfort with offshoring and also remote working post the pandemic. And uh, in simple words, that the pandemic has diminished the borders, I would say, in the technology world. So the increased comfort with offshoring should also act as a medium term tailwind for the sector. Till now, we have discussed the Indian IT services space predominantly, which is more an export market. Now we will discuss briefly a story which we all are aware, the digitalization in India. So we all know, if you look at the top two charts, the number of smartphone users or number of people who are accessing internet or the number of online shoppers, that's been increasing steadily over the past few years. This is also reflecting in the numbers reported by the listed companies, be a online food delivery player or online BPC retailer. The number of transacting users, they have been increasing over a period of time. The most important chart I would highlight in this slide is the top left chart, the top chart. India's e-commerce penetration is expected to double from 7% to 15% in the next 3 years. But still at 15%, the e-commerce penetration would be lower than the e-commerce penetration in some of the developed markets and also countries like South Korea. So, which means that even after doubling in 3 years, if this is just the penetration, the absolute numbers could be higher. So, even after doubling, the scope for or the runway for higher, more increase in penetration or higher growth is longer in digitalization of India story, which should benefit players who are focused on India and who are trying to disrupt the underlying markets through the digital advantage. So far we have discussed the three themes. One, technology is becoming an indispensable part of life, and Indian IT has been a consistent share gainer, and with the best in class or with the best talent availability, probably that should continue to hold on. And third, digitalization in India has a long runway for growth. The next question could be then, why now? Why should we invest in technology now? Here we try to compare the fundamental metrics of the sector to the with the broader benchmark. If you look at the left side chart, you could clearly see, if you look at any metric, be it revenue growth or PAT growth or the return metrics like profitability or the capital return like dividend payout, you could clearly see the index. The tech index is either superior or at par with the broader benchmark. The dividend yield has also been higher compared to the broader benchmark. So in short, the fundamentals of the sector are very healthy. And if you look at the valuations have derated over the past 18 months. And if you look at the left side chart, which compares the valuation of the sector compared to the 5 year and 10 year average, the valuations look at par with the 5 year average. And if you look at the right side chart, you could clearly see the sector's premium or discount to the broader benchmark that is also closer to the long term average. So the valuations definitely look reasonable. One other point I would like to highlight here is, if you look at the average premium or discount chart, you could clearly see the sector has always traded at a premium, or the sector has means on an average terms, it has traded at around 20% plus premium to the broader benchmark, mainly because of the healthy fundamentals which we discussed in the early slide. So the next question, if it's a secular trend that the tech penetration has been increasing, then why did the sector remain stable for so long?
Bala, I'm not sure if you can hear me.
Expectations for growth in
Bala,
2020.
again, you got cut off for about 30 seconds.
Okay, I'm really sorry for
Yeah,
this. I'm really sorry for this.
yeah, sure.
So, okay, what I was saying is that the top left chart, it clearly depicts that um, though the services spending has been growing higher than the GDP, there is a strong correlation to the direction of the GDP growth in the developed markets. And if you look at the top right chart, uh, you could see that the expectations for the economic growth in 2023, either global GDP or looking at the uh, developed markets like US and Europe, it is expected to decelerate compared to 2022. It is the expectation of deceleration which is which is reflected in the derating over the past 18 months. This we have also seen in the net headcount addition of the companies in the last 3-4 quarters, which is the bottom left chart. But another interesting data point is the bottom right chart, which is the total deal wins in the sector. The total deal wins has remained relatively resilient. Uh, the deal wins signify the intent to spend by corporations. So clearly, the intent to spend intent to spend on technology remains, whereas the actual spending is determined by the GDP growth and the recent near-term slowdown. Either the derating or the lower headcount addition is mainly because of the anticipated slowdown in the developed markets. With that, let me introduce the fund. Uh, the fund will invest at least 80% of the AUM in technology and technology related companies. These include industries like services, software, BPO, products, hardware, uh, also internet and internet enabled services, telecom, media, and then the data companies. It has a very wide universe. We will discuss about the universe later. So we will follow a multi-cap strategy. Clearly, the stock selection would be on a bottom-up approach. The focus would be on companies, either leaders or disruptors with competitive modes, and also focus on companies which has a higher potential for re-rating and compounding. Of course, the entry point should be reasonable valuations. Looking at the universe, it's a 2 lakh plus crore of market cap, distributed across multiple industries like IT, telecom, media, consumer services, which is e-commerce, includes e-commerce companies and fintech and financial services companies. By segments also, around 3/4 of the market cap weight is coming from the large cap, with the rest being distributed between mid and small caps. If you look at the performance over the past few years, you could clearly see the bottom two rows. The sector has underperformed the broader benchmark in FY23 and also FY24 YTD, mainly because of the reasons which we discussed earlier, the anticipated slowdown concerns in the developed markets. But if one looks at a longer time frame, let's say from FY8 to FY23, you could clearly see that in 11 out of 16 years, the tech index has outperformed BSE 500. This puts the earlier chart in terms of CAGR numbers. Clearly, 1 year and 3 year, the sector has underperformed, the benchmark has underperformed. Whereas if you look at the longer time frame, be it 5 year or 10 year or since inception, the index has outperformed the broader benchmark. This compares the fundamentals of the point in time fundamentals of the BSE Tech Index and also the broader benchmark. One could clearly see what we discussed earlier, that in terms of valuation, be it PE or P by B, the sector is trading at a premium to the BSE 500 index. But this is also well supported by the healthy fundamentals. If you look at the profit margin, ROE, dividend yield, free cash flow yield, etc., then the sector is definitely superior to the broader benchmark, which supports the premium valuation. Just touching upon few risks, we highlighted that it's an export-oriented sector, so so it is dependent on global growth. But if you look at the longer time frame, the tech spends have remained robust. So over a medium-term period, I think there should not be any concerns on technology spends. In terms of the employee turnover or war for talent, short term there could be impact if the attrition shoots up, but it's the supply, what we discussed earlier, the availability of talent balances out the issue of employee attrition over the medium term. Competitive intensity, I think the companies have relatively strong modes such as long customer relationship or reskilling abilities, so which should aid competitiveness. Finally, on the government regulations, this was a theme under the previous US government when there were restrictions in global mobility, immigrant visas, or when there was a push for increase in immigrant wages. If these kind of risks impact near-term fundamentals, but what we have seen over the medium term is any increase in costs at on-site location that also incentivizes companies to outsource or offshore more. So this could be a long term, medium term tailwind if that happens. Again, concentration risk, this will be so we will follow a diversified portfolio through multi-cap strategy. Looking at the benchmark, the weights distribution, IT is around 80%, telecom 18, the rest being media. It's a top-heavy index. The top 10 constituents total to around 92% of the index weights. Again, the fund will invest at least 80% of the AUM in tech and tech-related companies. So probably I'll just, if I have to summarize, then I would say the three themes again. Theme one, that tech intensity has been increasing across sectors and tech will remain an indispensable part of our lives. And second, Indian IT services has been a consistent market share gainer, and with the best talent availability, India will continue to remain a key source of talent for the global tech world. And third, digitalization in India has a long runway for growth. Finally, why now? Probably this is a sector with healthy fundamentals, currently at a reasonable valuation. So time to evaluate.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.